Welcome to Get Serious. Back here again this week, again on our new 3 times per week schedule, so we can ensure we're bringing the highest value content to you all, meeting you all as the audience where you're at, continue to take in the data and ensure that we are working with what it tells us so we can deliver what's working. With all of that in mind, I honestly feel like, every other podcast, if not every podcast that I record, could be related to some type of underwriting criteria for land. Because until I see like a much more dramatic improvement for comping skills and ability to assess markets, I just feel like I need to keep coming back to this again and again and again. Even as I was reviewing deals earlier this week, including earlier today, and some of these are from some more experienced operators too. Every week is a little bit different here, there's never a point of shaming anything like that. We're all trying to run businesses here. Clearly, like in our side of the business, I mean, all we really do all day, every day is underwrite and comp properties. So we don't expect any other company to be as good at us in that regard, similar to like when it comes to direct marketing or phone skills. I wouldn't, purport to say that, we're equal in those skills compared to many of your businesses. I'm just trying to educate the industry and, make sure that we're kind of clearing out some of these just continued issues with comping properties. And we're not talking like, being off by 10, 15%. Like I want to say 80% of the properties that I reviewed this week, like they were off by, 100%, meaning that, generally we're not going to recommend purchasing or funding a property unless there's roughly 2x gross conservative margin in it. And what I mean is that like 80% of these properties sent over to us, we would have cut the anticipated purchase price in half to even get in the neighborhood of what we think might work, meaning that, these folks were underwriting these properties at market value and expecting just a very unrealistic exit number. Not saying that it couldn't happen. Again, you never know what the objective facts are until you put stuff on the market, and it's entirely possible we could have been missing some details. We can only work off of what people send over to us, but a lot of these were just like obvious and glaring mistakes or potential mistakes, given hopefully no money left the door outside of, putting your marketing dollars to work and having your team assess the properties. But we all assume that's kind of, consistent running costs in this business. So, what are these, continued common issues here? One, I think is just like, I think so many folks are just being unrealistic with the current market conditions. And I'm seeing even more data, both bottom up and top down here, where I might even be more cautious about the market than even a few months ago. And I know, a lot of folks have, noted that. I don't think there's anybody out there saying, yeah, like the market's just on fire right now and, you can sell anything. Like nobody is kind of saying that. But now I've seen like even more trepidation, arguably, than we were seeing at the start of April, May, potentially. It's I wouldn't say it's better than that. At best, it's the same. But we're seeing some data in certain markets that might even be indicating even more of a slowdown compared to when the tariffs and trade war, et cetera, kicked off a few months, well, really 4 months back at this point. So that's just something to keep in mind here. Like you can't be cautious enough when considering these markets. And so I'll see some of these properties here, and this is really the critical thing. A lot of people will try to pick markets based on sell-through rates, etc. But the thing is that sell-through rate as a default um, will consider the past 12 months of sold data in relation to the active properties. I don't think that's a relevant measure right now because the market it's been about as volatile as you'll ever see in the land industry over roughly the last 12 months. Like, it was a big bull market end of last year, start of this year, and then it got like really hard after that. And so I don't know what you would call an adjusted sell-through rate. Maybe I should trademark that or come up with more catchy name. But we're really, again, looking back to like the start of Q2 of 2025. So, if you're on Redfin, Zillow, whatever, like looking at, that last 3 months of data, I know it's like a little bit more than 3 months. That would put us, from the time of the recording, like mid-May-ish. So you could turn on your 6-month criteria. But even that, I would be cautious about when you're looking at your sold filter, because if you go back to the 6-month first, you're going to have stuff that happened prior to Q2 of 2025. Plus, I really want to see properties that actually pended after the start of Q2. So you might have some solds that were, actually sold mid-March, even early May, but they pended prior to the start of Q2. So it's a different market that the actual sold date doesn't reflect. So that's a key distinction that a lot of folks won't necessarily pay attention to here. And so a lot of these properties that folks are selling are sending over to us. I mean, you look at the past 3 months of data, and there might be like one comp that sold, maybe a couple, maybe zero. And then you turn on the actives and it's just like all over the place. Maybe there's a couple pending comps too as well. So like when I see that, it's like, to me, it's just like very obvious. Whoa, this is like a high risk market here. Like, we really have to now, look at our characteristics. Do we have a much more superior property that we think we could outperform? Okay, what were the characteristics of the sold comps that actually sold? Like, what was their true sold price? And then we have to like make sure that we can undercut the active market dramatically. Well, I don't know about dramatically, but significant enough to undercut effectively anything on the market, unless you just have disgustingly good superior characteristics, which rarely people have. A lot of people overestimate the quality of their property. And within the land industry, it's not uncommon to land like the super juicy stuff from a characteristics perspective, because most sellers are going to have a firmer grip on those, but not always. So just be mindful of that. It's even as I'm speaking to this now, like, it's a little hard for me to kind of cover this without showing hard examples here, compared to like when I'm doing a land diligence review, for instance. But, a lot of these examples, again, were just so glaring to me, where it's like, okay, you're sending us this property to be funded, or at least, for consideration for your own purchase, whatever. And you're telling me that, the price that you think you could expect to sell at. And I'm looking at this market and I'm seeing, okay, maybe one comp on the sold market that actually justifies that price. But oftentimes that's not the case. And especially within the last 3 months, that hasn't been the case. And then I'll look at the active market and just see so much sitting with varying quality of characteristics across these properties that are still anticipated being, to find a buyer. And, the price per acres that are sent over to us, like, they just don't make sense. Like, they're either, at the middle or high end of stuff that's being listed, without accounting for kind of, hey, this is a really difficult market. You need to, again, either have really superior characteristics or be able to undercut everything, ideally both, that's on the market to get anything to actually move. So again, I feel like I could do some variation of this podcast, again, almost every single time that I record here, because something is still, like, I've been doing this for years now, and like I still see the same mistakes again and again and again. And like it's like again, comping land, like doing it well across multiple different markets, like it's a hard skill. It takes, we still screw up sometimes when it comes to assessing markets properly, because there's inevitably going to be some guesswork involved here that you need to estimate carefully. But we've developed some more scientific methods over time that limits those mistakes to a much more significant method across any market in the US here. And so like that's why I can just even within 5 minutes or less than that sometimes just tell, oh my gosh, like this is just you're going to get killed in this market if you try to accomplish this. Or like again, especially like subdivides, and you're expecting to move like I don't know, a ton of child parcels. Like for instance, we saw this 180-acre play north of Dallas, which first off is like a really rough market right now on the downtrend, like massive downtrend, especially for resi lots. Expecting to chop those up into like 2 acres. So you're looking at like an almost 100 child parcel cut up where you're going to have to install roads, etc. And basing the per acre pricing on like one, maybe two comps that have sold relatively recently. And then there's just a smorgasbord of active comps of varying acreages that have just been sitting forever. Characteristics kind of across the board. A lot of them have more superior stuff. And I'm like, how is this not registering on how risky of a play this is? And I get it. Yeah, maybe you work with a capital partner, not sure how they're going to assess it. Like you're offloading some of those just to get a second opinion. But like to me, some of these are just like so obvious where it's, I don't know what price, in a market like that, yeah, if you gave the property like for free or, pay off taxes or something where I can just like take where I can just crazy undercut the market so dramatically by like, I don't know, like 50% of anything that's on the active market, maybe that would be worth it. But to move that much inventory where you have so much working against you, like it doesn't make any sense. I'm not sure how I can be more clear about some of this, except like, to summarize for now, really look at those last 3 months, recording this in mid-August of 2025, last 3 months of sold comps specifically. Look at what's pending on the market. You can extend it out to 6 months, but again, just really make sure that pending date was after April of, start of April of 2025. And then really look at that active market. Like when you turn your filter on in Redfin and Zillow, like, do you just see, 5 to 6x the number of active listings compared to anything that you're seeing on the sold or the pendings? Like that should be just alarm bells going off like crazy. And then you have to assess all the pricings and making sure that you can undercut, how long days on market, et cetera, et cetera. Like that is a just key point that will put you ahead of clearly like 90% of the land industry just by doing that. And then again, you have to assess the characteristics. Like what are your sold comps showing? Some of these sold comps, yeah, they have like a newly placed mobile home on the property, or maybe they had some utilities installed, they already have a home site, etc. So you're not accounting for these benefits on why some of these properties are actually selling in a more difficult market. And then just, or maybe it's like much closer to a township or a, city center, etc. Like that tends to be more popular right now, like the deep rural stuff that was really moving in COVID, finding other opportunities just to pick up some land or eventually like vacation home or just move down there. Like it's just not as popular at the moment, especially in those like typical land flipping states. So I really hope a lot of you guys put more of this into your practice. And if you're already doing this, you're like, Chris, I already know how to, like, then I applaud you. I'm just saying, like, until we see this like be the rule or even happening with, and some of these people sending cut, like they run big businesses. Like I can't, it's and if you're succeeding, great. Maybe you're just proving me wrong. Excellent. Like keep doing what you're doing. It's working. I think it's just been like obvious mispricing in this market, and probably a reason why a lot of folks are struggling here and getting stuck with things that are not going to sell and just contributing to the problem. They have to get all stressed and not, lowering the, kind of escalated pricing that is, continuing to lead to this buyer's market that is just difficult to operate in. So hopefully this is all helpful to you guys. Let me know. I'm sure I will return to this again and again and again. And I'll probably write about this weekend too. So with all of that, and appreciate you all listening, subscribe and share. Remember seriousland.capital for any of your funding needs, land daily diligence, which I mentioned, Facebook group, zero cost review of your land deals, and landpricer.ai, which I should mention is intended to solve these problems. Like anytime I'm going through these manual reviews, it's going to be better than me as well too. Like Land Pricer should just solve this pricing issue, because clearly a lot of folks are struggling, and the current tools on the market just are not really addressing this at the level of detail that we need. So just it's reorienting and reassuring me that we're heading in the right direction here, because it's a core problem. All right. Take care. I will talk to you on Monday. Have a good weekend. Bye.